BEL earnings flashing on your screen right now. Net profit at around 1,286 odd crores versus that of an estimate of 1,085 crores. So slightly better than estimates where the net profit is concerned. Revenue at around 5,764 odd crores versus that of an estimate of okay, we've lost that number, but EBITDA slightly better than the estimates as well. So net profit, EBITDA better than estimates. Let's try to see as to what the revenue number also looks like. EBITDA for sure is a beat, but revenue, there you go. 5,700 odd crores versus that of 5,400 odd crores of expectation. So there's a beat there as well. And the stock is also bumping up on the back of the kind of numbers that have come in. Margins will be something an interesting picture to watch out for. But I think we'll be soon joined by Anushi also to give us a more perspective as to how BEL has performed. I think better than expected numbers for sure, and the stock reaction suggests that.
Definitely, and it was one of the major results that we were watching out for this week as well. In terms of order inflow, it's been a stellar run for the company over the last few months. They also had given a strong guidance of over 27,000 crores in terms of order book. And this is going to be one of the interesting ones because we are waiting for some more commentary from the company's conference call as to how the future order for QR SAM orders come in as well. So this will be the other one because including that itself will be 30,000 crores. So the management in Q1 actually did surprise investors that the order inflow guidance, if everything works together, and there's a good chance it could go all the way up to 57,000 crores. So while it did miss some guidance of last year of FY25 because of the spillover that happened in Q1 of FY26, the street took it very well with both hands as well. So if you look at the 1 year picture and the 1 year return as well, it's done very well for its investors, up over 46% the last 1 year as well. But largely a key stock in the defense space, and the returns have been phenomenal for this company to say the least. While margin profile, as Mahima highlighted, at 29.4% have been stellar.
Yeah, and a slight downtick there versus a 30.4%, but that's very normal in a chunky business like BEL. Plus revenue up overall 26% on year-on-year basis, EBITDA up 22 odd percent, and net profit up almost 18 odd percent. I'll take this up with Mr. Chokalingam. Mr. Chokalingam, the earnings has been a strong footing, stock up 2% as we speak. Your view with regards to where BEL stands, and if you had the chance to look at the numbers as well.
Yeah, certainly. I mean, it was one of my first stocks when I became an analyst to track. Great company, no doubt about it. And, but the valuation is now around 55 PE. That is the only area of concern. But tactically, fortunately, the stock can again rise further because historically, the December and March quarters are normally very good for the company. So therefore, the momentum may continue. So particularly little risk-taking investors can buy or even hold it for 3 to 6 months because in the short-term outlook is looking good for the stock.
So Chokalingam, also the one other thing that we were watching out for in terms of margins, that expectations were of a weaker profile of 26 to 27%. It's actually come in at 29%. So it's been a stellar number to say the least. How do you make and what do you make of the order inflow of the company as well? Almost 6,000 crores has been the estimated order inflows versus 2,400 crores in the same time last quarter. In the same time last year in Q2 of FY25. So the order inflow has been quite strong. What do you make of the number coming in, at least on this front, that could be expected from the management as well? Because and the margin profile also, has it surprised you on the upside?
It is not, because being a defense company, project-based, there is a huge volatility over the last 10 years on a quarterly margin. Order book is quite surprising on a positive note. And this company gets a significant amount of advance also in cash from the vendors, from the customers. So therefore, rise in the order would again is a positive for the balance sheet as well. So therefore, it can stick you a little more return in the short term itself.
All right, the order book number has also come out that stands at 74,453 odd crores. I was just taking a look at what Anushi had also said earlier with regards to where guidance stands. Expected revenue growth at 15% is something that the guided range was, but revenue, of course, this quarter has been up 25 odd percent. Margins at 27%, so margins have also been on a stronger footing versus the guidance. Capex more than 1,000 odd crores is what the management has kind of guided for. Akshay, a very good afternoon to you, and thank you so much for joining in. Your view with regards to where charts are concerned for BEL. As Puneet mentioned, it's seen a good rally in the past 1 year. Do you think the momentum is there to stay?
First of all, good afternoon to all. Look, if you look at the broader charts of BEL, the momentum is still to stay, but it depends on how your time horizon is. So if you are more short term, or your the vision for, it's more of a vision for trading for which you bought, then I would suggest that upside may be a bit capped from the current levels, considering the technical parameters and the volumes with which it has surged. But if it's a long term bet, then I still feel that you need to hold on to this. The broader trend is still strong. Maybe it might take some more time to consolidate, but longer term is a hold. Short term, it's more of a profit booking.
Got the view, Akshay, but let's get Anushi also, who tracks this space very closely, to get us a roundabout of all the results. Anushi, stocks definitely reacting very positively to the results. What do you make of the first cut?
Well, it's a strong set that we are looking at for Bharat Electronics yet for another quarter is what we are seeing. It's a 26% of an uptick in terms of where the revenue is concerned. 5,700 crore is the figure, and this is against the expectation of around 5,400 crore. Of course, order execution playing part into this is what we are seeing. Even in terms of margins, well, the expectation was that there would be some bit of a decline with the margins coming downwards about 27% or so. This is on the back of the high base effect as well, but the margins have also held up in the line of around 29%, and this is higher than what the company's guidance is for FY26. FY26 guidance is of around 27%, so it's a beat across that also that we are seeing. Net profit seeing about an 18% of an uptick, which is a positive as well, what we are looking at. If we just have to reiterate the guidance and see what we have to look forward in the management call that's taking place today, the order inflows expectation for the overall year is 27,000 crore. Now this includes 30,000, this excludes 30,000 crore of the QRSAM order, the receipt of which already Defence Ministry has already issued. So it's the finalization part of it. When would this be realized, whether it will be in the third quarter or the fourth quarter, is something that we should be watching out for. Apart from that, if we look at the revenue growth guidance of 15%, the business is on track to surpass that kind of guidance that we are looking at. While for margins also, they have a margin guidance of 27%. So how H2 would shape up in terms of margins is also what we will see. Apart from that, export business, overall contribution is increasing in that particular area. So how that would shape up in terms of margin management commentary is also something that we should be watching out for.
Thank you so much for bringing us those details. BEL is the counter in focus on the back of its Q2 numbers. If you can try to pull up the chart, almost at its day's high point, a slight downtick from there, but up 2%.